Welcome to Explain the Charts. Today we're going to take an in-depth look at SPY, the S&P 500, and see how the current news is playing out in the charts. Let's first look at the current market landscape. The Dow Jones Industrial Average is making headlines with its 25th record close of the year, a positive sign for the overall market. However, the S&P 500 and Nasdaq have slipped slightly, which could indicate some cautiousness among investors. Today, investors are eagerly awaiting the release of a crucial inflation report, the Personal Consumption Expenditures Price Index, PCE, which is closely watched by the Federal Reserve. The PCE is expected to show a 0.2% monthly increase in July, translating to a 2.5% annual rate. The core reading is anticipated to have gained 0.2% from the previous month, marking a 2.7% increase from 12 months ago. This inflation data could significantly influence the Federal Reserve's rate decision in September. If the report indicates a slowing inflation rate, it could boost investor confidence, leading to increased risk appetite and potential upward pressure on the market. However, if the report shows persistently high inflation, the Fed might be less inclined to cut rates, potentially impacting market sentiment and causing a pullback. Now, let's turn our attention to the SPY daily chart to see how this recent news is affecting the price action. As we look at the last few weeks on the daily chart, we can observe a gradual upward trend in SPY. This suggests that, despite the recent news, investors are still bullish on the market and anticipating continued growth. The current price level around 450 is hovering above the 200-day simple moving average, a key indicator of long-term trend. However, the price action shows some signs of consolidation. We see a narrowing of the price range with smaller candle bodies and lower trading volume, which might indicate that the market is taking a breather before continuing its upward movement. This consolidation phase could be a short-term pullback before the market resumes its climb. Alternatively, it might be an indication of a possible correction, which could present a buying opportunity for long-term investors. Keeping a close eye on the news and the upcoming inflation report will be crucial in determining the likely outcome of this consolidation. To understand the current market sentiment, let's zoom in on the SPY 1-hour chart. The 1-hour chart shows a series of higher highs and higher lows over the past few trading sessions. This indicates a clear upward trend and strong buying pressure in the market. The price action is also accompanied by a relatively high trading volume, which strengthens the bullish outlook. However, we see a slight retracement from the recent high, which might be a short-term profit-taking opportunity. The next few hours will be crucial to watch. If the price breaks out above the recent high and holds, it could signal a continuation of the upward trend. On the other hand, if the price drops below the recent low, it could indicate a shift in sentiment and a potential reversal. To gain a clearer understanding of the short-term dynamics, let's examine the SPY 15-minute chart. We can see that the price action has been quite volatile over the last few trading days, with numerous short-term reversals. The 15-minute chart suggests that the current market sentiment is mixed, with both buying and selling pressure present. However, we can see a noticeable upward trend over the last few hours, with the price pushing higher and holding above the 20-period moving average. This trend is reinforced by the increased volume during this period. It's important to note that the 15-minute chart is prone to high volatility and short-term fluctuations. Therefore, traders should exercise caution when making short-term decisions based on this chart. It's essential to consider the bigger picture on the daily and hourly charts to gain a more comprehensive view. Let's now shift back to the daily chart and analyze some key price levels that traders should watch. One critical support level lies around the 200-day moving average, currently at 440. A break below this level could indicate a significant bearish shift and potentially trigger further selling pressure. Conversely, a bounce off this support level would indicate strong bullish momentum. Another important price level to monitor is the recent high of 455, which represents resistance. If the price can break above this level and hold, it could signal a continuation of the upward trend. However, if the price fails to break through this resistance and reverses, it might indicate a potential correction or a shift in sentiment. The upcoming inflation report could have a significant impact on these key levels. If the report shows a substantial decrease in inflation, it could reinforce the bullish sentiment, potentially pushing the price above the 455 resistance level. However, if the report indicates persistent inflation, it could lead to a sell-off and a possible break below the 440 support level. Traders should also pay attention to the volume patterns on the daily and hourly charts. Higher than average volume during a breakout above resistance or a bounce off support would reinforce the underlying trend. Conversely, lower than average volume during a breakdown below support would indicate weaker selling pressure and potentially a short-term correction. While the market is currently showing bullish signs, it's important to remember that the market is inherently unpredictable. Traders should always employ proper risk management techniques and enter trades with a well-defined plan. This includes setting stop-loss orders to limit potential losses and taking profits when the price reaches predefined levels.